A generational opportunity amid China's silver buying spree, wars, and the fourth turning. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, we welcome back Dhruv, who's been taking more of a big picture look at the world in his news article for today, and specifically digging into some of the implications of China's unfolding policies and strategies. How are you going today, Dhruv?
Good, Chris. Thanks for having me back on.
Thank you for coming back on. Now, the article today, China focused, but really addressing some of those bigger issues that the world faces and linked it back beautifully to the precious metals. So I thought we'd start off by talking really about China specifically and silver, because I thought that was one that people would be really interested in. You were saying that they were buying silver quite directly from the miners. They were using a little bit of fixed price there. There's a lot going on. Can you sort of break that down for us?
Definitely. So China's buying massive amounts of silver and they're basically stockpiling it uh, for various reasons, but really you can infer that it's for some sort of contingency if they were to invade Taiwan, which, most military analysts would agree that they will this decade. And they've come out and said themselves that they're actually, certainly going to be doing that. Um, and they're stockpiling it for a variety of reasons. They do need silver for energy, but they're also moving towards de-dollarization. We've seen what happened with the US dollar being weaponized against Russia when they invaded Ukraine.
Hmm.
So that sent a message loud and clear to nation states around the world that if you want geopolitical sovereignty, you can't rely on your dollar reserves as a safe haven asset or a reserve currency in those situations. So China's stockpiling massive amounts of silver. The way they're doing it is directly from miners rather than going through any type of exchange. So they're really looking at purchasing unrefined silver at a fixed price and then refining it themselves. This is essentially an impact avoidance strategy. They don't want to affect the spot price of silver while they're doing this, mainly because they don't want the spot price of silver to go up or rocket up before they've got their stockpiles in place. But they also don't want unwanted attention. They don't want backlash from any international body. So the way they do it is off market, which has in the short term no impact on price, but in the long term it can have some serious impacts on the spot price of silver.
And when you were talking about the weaponization of the dollar in there, I mean, I felt that was a huge strategic mistake by the US at the time when they did it, with really kicking Russia out of the SWIFT system and all those things that were going on, because the obvious consequence to me was that down the track, other countries would get that message, as you're saying here, China did loud and clear, that they can't rely on that system because it can be pulled away from them. So they're going to look at other alternatives. It's something I suppose a lot of people watching this will have been thinking about for a long time, that ultimately it does come back to things like precious metals as the solution um, in that environment. Because ultimately, if you're a country or a sovereign state, you go, well, if we can't rely on the world order as it has been, we need to protect ourselves a little bit on that.
Mm-hmm.
What I'm interested in specifically is how it's going to impact, though, if China is pulling a whole lot of that silver in particular out of the market. Because if they're stockpiling, like you're describing, they're doing all of that off market, the price is certainly up there, but doesn't really seem to have noticed that yet. Do we end up in a real high level of volatility? Do we end up seeing, because remember, we already had a global supply shortage of silver. So, yeah, this seems like it could be really a flame to a tinderbox, or it seems like a very volatile situation could unfold with the price of silver around that.
Spot on. I think it's going to affect volatility in a big way. So supply shock is really what we're going to be looking at down the track for silver. Um, like you said, there's already a massive shortage of supply. I think in the order of magnitude of about 5 billion ounces from memory. And what this leads to, like I said, in the short term, it's not going to affect the spot price, and that's the whole point of their strategy.
Mm.
But in the long term, when you have a supply shock of physical silver, it leads to increased volatility because of lower liquidity in spot markets. So if there's low liquidity in silver spot markets for physical silver, there can also be a decoupling between the futures markets and the physical markets for physical silver. So what you normally see in a healthy market where there's ample supply and steady demand, the futures markets are usually slightly higher in price than the physical silver market. The reason for that is people just assume that the price of the commodity will steadily increase over time. This is a contango market. Now, when you have stressed market conditions, you have something called backwardization happening. And what that means is the physical silver market is actually at a higher price than the futures markets. And there is that decoupling that occurs. So how stressed the market gets can have some serious systemic issues, but in the short term, there might be a bit of an arbitrage trade there. But really what that leads to is a huge spike in spot price over a couple of years. Something similar happened to the palladium market not that long ago. So there are quite a few examples of this happening before in various commodity markets. So yeah, it's supply shock is really going to be interesting to keep an eye on over the next couple of years. And this China massive stockpiling is only going to add to that, like you said.
And you're talking about China specifically here and things going on there, but you've also been talking to us several times now about the fourth turning, this concept that we're coming to the end of a larger cycle that's going on that tends to predict financial crises, systemic changes, lots of other chaos unfolding. And as we've said a number of times, we appear to be living through that right now. We've certainly got very volatile situation happening around the world, lots of geopolitical uncertainty, market uncertainty, all of that coming together. Do you want to maybe step us through a little bit more of that again, but also specifically the role here that precious metals play? Because if you're talking about a supply sort of shock coming in the form of what's happening with the China stuff, then you could imagine that playing into this really to create quite a crescendo in price potentially.
Definitely. So, just to give a quick overview, the fourth turning is the fourth 20-year cycle in a macro 80-year cycle. Um, Generally, every 20-year cycle will have its own financial crisis, but each 20-year cycle resonates one on top of the other. And when you get to a 80-year cycle finishing and a new 80-year cycle starting, the financial crisis um, and the systemic collapses that take place are usually much, much bigger than any individual 20-year cycle. So to put it in, give you a reference point, the last 20-year cycle, we had the global financial crisis coming sort of towards the end of that 20-year cycle. And for this 80-year cycle, the previous time we were in the same phase was the Great Depression. So we should see something on a similar scale to the Great Depression leading into this next 80-year cycle. Now, anytime you're seeing massive financial resets or systemic collapses, the idea is to not get caught up in the chaos of the transition from one system to the other. You really want to sidestep the financial system, preserve your wealth, and then re-enter the new system, whatever that might look like. So to have a vehicle that can actually help you do that, you're looking for something that's decentralized, that has no counterparty risk. It's not connected to any government or any sort of hedge fund or any sort of financial institution. Something that's been around for hundreds or thousands of years. So precious metals really fits that quite perfectly. Like I always say, civilizations have come and gone, but gold and silver still hold their value. So the idea around the spike in silver playing into all of this is that while gold gives you a safe haven asset, silver provides a similar safe haven proposition as well. However, silver gives you an added element of speculative growth on top of this. Now, variety of reasons for that. There's the industrial use cases of silver, which are more prevalent today than probably ever before, just with the increasing use of electronics and green energy. But then there's also the speculation around asset growth when you see gold going through a secular bull run, something that provides a similar value proposition with a smaller market cap and lower liquidity will add to investor speculation. And then you're going to see investors piling into something which, because of the lower liquidity and smaller market cap, you see higher price growth in terms of percentage return on investment. So really the opportunity here, and there's always opportunity within chaos. So really we're trying to, work out How to get shelter from the storm? In these fourth turnings, the attitude that is rewarded is usually humility, risk aversion, and patience. But within that chaos and that transition from one system to the other, is there an opportunity in there? And I think with silver, there really is. It's not only a once in every 20-year opportunity, but it's at the scale of once in every 80 years. So this is really a generational opportunity at the scale of once in every century, essentially. And the way people could play that is to keep an eye on the gold to silver ratio, basically. And you can see it when it's high up. Silver's undervalued when it's priced in gold because the ratio tells you how many ounces of silver will give you 1 ounce of gold. And when it falls off, that means silver's playing catch up with gold. So at that point, you've got a higher ROI on your silver than your gold, and you can convert it to gold down the track.
And on that point, a lot of people would probably think, well, am I late to that trade? Because specifically when you're talking about silver and the gold silver ratio, because they might be going, well, obviously a lot of the gold price has moved already, the silver price has moved already, but the GSR today is around 84. You talk about that in the article. That's not late to the party. That's a high number, and remember, the high number means it's almost back to front. It means that the opportunity is there as pretty much as it's ever been in the past. So is that how you view it?
Definitely. In terms of timing it, from a cyclical point of view, by no means is it too early. And then purely looking at it from a GSR, gold to silver ratio point of view, 85 is an objectively high number. Historically speaking, it's ranged from 1 to 1 to 125. Now, everyone has a different view on where exactly this number should sit. Some will say 1 to 15 is fair. Others feel like 1 to 35 is a good point to start moving your silver into gold. It's really subjective, but the objective truth is that if you buy 1 to 80, 1 to 85, which is objectively high given historical data, selling it at anything lower than that, you've made profit when moving from silver to gold. So the systemic collapses, the broad-based systemic collapses have not completely reached fruition as yet. They haven't really started in many ways. So positioning yourself early on into silver while the gold to silver ratio is high, and then allowing the collapses to take place, you might see the ratio go even higher during the collapses, which would be another buying opportunity to load up. Once the collapses have seen the dust starting to settle, you'll see other markets really struggling to recover and taking many years to recover. During this time, gold continues up, but silver really outperforms gold. That's in the latter half, usually after the collapse has already happened, is when you'll see the gold to silver ratio start to fall off a cliff. So it's still very early. But like I said, the attitude that gets rewarded in this phase of the cycle is risk aversion and patience. So rather than trying to time things perfectly and say, hey, I'm going to wait for the collapse and then load into silver, a lot of people will just position themselves early, sit back and relax, allow all the chaos of the world to unfold, trade their silver into gold once the ratio has fallen off, and then they're basically sitting pretty ready to enter the new system with their gold, whatever that might look like.
And that makes a lot of sense to me because as a strategy, it's one that you don't have to time precisely. You can really just sit on that for a long period of time and feel very comfortable in that as a trade because you would expect that at some point that ratio will be lower. That makes a lot of sense. Last question today. You specifically mentioned the Taiwan invasion and the potential for that down the track. It's been something that has been flagged as you've talked about. I mean, we don't know. Of course, no one knows how that would unfold or whether it will unfold. But given the potential for that, do you think that this strategic resource accumulation you've been talking about, whether it's silver, or you've also mentioned in the article food, other aspects, coal, things that they're strategically stockpiling, in your view, is this the start of a shift or a broader shift at least towards economic independence from the West? Is there a consequence here for the West?
Most definitely. I think it's not just China and the US that you're seeing this break happen from. It's already happened with Russia. And it's not really just a few nations moving away from the dollar or de-dollarization. It's a broader theme of globalization essentially having peaked, and we're moving into deglobalization. So this is on the 80-year cycle, quite typical for where we are right now. Moving from the first to the second and third turning, you see a massive rise in globalization.
Right.
There are trade agreements. Generally, the idea is to have prosperity, lower costs. and people are looking at a growth mindset. Versus getting into the fourth turning, you start seeing people really battening down the hatches, so to speak, and looking for stability and security, and each nation sort of focusing on themselves. You see a rise in sort of strong leaders that are less concerned with being popular with international relations and more interested in serving their own countries. People really want to look after their own backyard because of all the instability and the chaos that's looming. So we're going to see a lot more of this, I think, continue on, where you see nations really loading up on assets like precious metals, but also food and energy to become more self-sufficient and sovereign, so that whatever global instability takes place, they're not really reliant on an ally today that might not be an ally a few years down the track. So I really think that's going to increase moving forward for sure.
Well, lots covered today, and it's really great to have you on board with these discussions, because you really take that bigger picture view of what's going on and put all the pieces together. So I really appreciate that, and thank you for your work on that today, Drew.
Thanks so much, Chris. Always good to chat to you. I'll speak to you soon.
Speak to you soon. Thanks everyone for watching. We'll chat again soon.